In other words, we don't necessarily have to guess about what they're going to try and accomplish. Sometimes it's just simply not clear. Other times it's really obvious. So for example, you can see as we approach this level here, there is a price action component which is very fast into this area. But if you look at the deal book is in blue in the background. You'll notice that the deal book has almost no doubt what the dealers are doing here. Do you see that? It's quite clear that the dealers are buying this level. The level in this case being the 19.5 wholesale dealers level. So when we see the price coming back into this level, the price action initially looks kind of neutral, it's possibly even slightly bullish when it taps this liquidity here at the top of the hour at 1300 hours. However, once the dealers have seen the selling that's came in from that candle, the dealers have obviously made the decision at that stage that they are going to quite clearly sell through this level for the time being. And sure enough, they sold through the level for the time being. Now, one might imagine that if it went a further distance than this, that this would have been a very easy decision to sell back against the level. However, when we retest back into the level, again, you can see that the dealers are hiding absolutely nothing. This level is going to go bid here, isn't it? Look at the blue line story. This level is probably as bullish as it was the last time we saw exactly the same story here. So this price is likely to go buy side at that point. And from that point onwards, you can see that riding this from that point, 30 full points, that's a $600 winner there in about 10-15 minutes, which is very good. And that's about a $600 winner there in about 10 or 15 minutes. That's pretty good. And that's around about a $500 winner there in about 10, 15, well, actually about 5 minutes on that one, which is pretty good. So being able to read with clarity, and that's what the difference is, being able to read with clarity what they're going to do at a level, because sometimes you're simply not going to know. There's a macro-micro story, maybe divergence, maybe the micro is bullish, but the macro is slightly more bearish coming into a level, and you're saying, well, that doesn't make a lot of sense. I thought they would jam up in here based on the macro. But obviously there's a maybe bigger picture macro that you're needing. Short-term value on these is more important than the macro swing, because this is not a macro trade level as such, as opposed to this level here, which is a macro trade level, and this level here, which is maybe a macro trade level as well. So you start recognizing that these clues are very, very vital to us. We're trying to make a decision in these areas about what the dealers are doing as opposed to what they're likely to do. Now, we might disagree with what they're doing. You might look at this and say, I love the long NASDAQ trade. I love how high the betas are. But when you see that the dealers are heavy selling into this level, you start thinking to yourself, well, I like how strong the buy side story is. And maybe looking into an area like this then would make more sense, looking for a divergence there. Or likewise in here, you might say to yourself, I like the short sell. So you maybe look at that and say, but I can't sell this level because the dealers seem to be buying the 500s. So if I can't short sell it, maybe I need to wait for the price to retest back up into these edges before I get a short sell opportunity. So reading how the price action is evolving, because that shows up on your spectrometer, of course, on a lower time frame. So if you're on this time frame, of course, running down into a 1 minute chart, it'd be far, far better if you take it down into a 30-second chart or even a 15-second chart, because then you'll see more of an opportunity to find that storyline. And if you can find more of an opportunity to find that storyline on a lower time frame using the spectrometer, well, that gives us a better clue into how this trade evolves. So once we get into that trade area, that's what we're looking for. So it's the same when we hit VWAP as well. When we trade into VWAP, this is why we were talking about these high probability trade decisions, because we want to know where VWAP is trading so that we can see that sellers are getting trapped above VWAP and buyers are getting trapped below VWAP. The more that happens, the easier life becomes for us. So you can see in here, it doesn't look like anybody's really getting trapped in terms of selling. It looks like the price is easily outstripping the deltas until, of course, we start seeing these buyers getting trapped in here. and we're thinking, right, we're probably going to revisit VWAP at that stage. Good decision, because you did then revisit VWAP very nicely, actually. But when we revisited VWAP, take a look at the arrival of sell orders. Look, there's a lot of sell orders in here, and yet there's only a couple of very large candles. All the rest of the candles here, you can see this candle, for example, here. Look at the size of the delta on that candle, but look at the shape of the candle. It's almost a spinner candle with a big voltic. Reeves maybe even going to get one of his yellows or his pinks at that stage. And you start looking at that VWAP there, and you start looking at the delta, and you start looking at the arrival of voltics, and you start saying, I like that storyline, because if VWAP does go bid, and you don't buy it unless VWAP stays bid, because you'd have a buy stop order, of course. So when VWAP goes bid, you know you're going to trade at least to this level liquidity here, at least. Because if you're a seller, and a lot of people don't quite understand why that's got to be at least to that price. Well, if I'm a fader of a top edge, I don't fade a top edge expecting to close out my positions at VWAP. I fade a top edge because I think the market's now bearish. If I don't think the market's now bearish, then I wouldn't be selling the top edge. So if I think that the market's bearish, I wouldn't be expecting this to go bid. And if it does go bid, if I'm going to resell it above VWAP, it's going to have to be at a higher price anyway. Remember, if you're trying to sell VWAP, what is the rule for selling above VWAP? It's got to be at a higher swing than the previous swing. Does everybody remember that? So if it has to be at a higher swing, then the price must retest this price level here. Now, whether you think it's now a good short, it doesn't really matter. It's just that's where it should have went to in the first place. So the idea is to keep using that information to keep the press going until you start arriving at standard deviation moves. So you start looking at your standard deviation move so that you start recognizing how far the price should be going on any one particular rotation. In terms of the NASDAQ, of course, this is going to be really difficult to recognize because of the huge volatility we do have in the NASDAQ. But, you know, the one standard deviation storyline takes us 235 points upwards, 235 points. So from VWAP, we should be looking at a price, excuse me, looking at a price of around about 700, which is nowhere near where we're at just now, is it? Nowhere near. We're not even at 100 points yet. So there's a lot of price upside on this, isn't there? If the price holds. If the price holds. There's a lot of upside in this. So if the volatility starts reducing, and how do we know if volatility is going to start reducing? The price should start jamming VWAP. You can start considering other things. If we know that one standard deviation is 235 points, then 115 points approximately is going to be half of that narrative, 115 points. So 115 points takes us to about the level of 600. So we're still miles away from that. 600 isn't until a way up here. So we kind of have an idea that really worst case scenario, we would expect the price to be trading up there. Even if we're not mad bullish, crazy bullish, we would still expect to trade our way up to 600. Well, if you're able to get in at VWAP at 480s, and you're able to recognize an upside opportunity to 600, looking at a $2,000 upside in this. You know, so it's worthwhile taking a shot at that $2,000 upside, isn't it? And sure enough, it's on its way towards that as a possible target price. Whether you like it, whether you don't like it, at least you recognize that opportunity. Short silver's done well. Well done anybody that joined me in that bit of business, guys. We've just came into a new green zone. The value collapsed very quickly in that silver short. So it's taken us full swing back into the other side of the silver market, which is a little bit disappointing, a little bit unfortunate. Kind of obvious when it's dropping so hard that we were going to reach an exit price very, very quickly indeed. And as I said, kind of disappointing that that was the case, but a nice opportunity closing out our short silvers, 33.05s, 33 evens, trading 90. It's not bad. It's $500. I know it's not in comparison to some of the other stuff we've had in silver. But hey, maybe the markets are going to go a little bit quieter today. We kind of had a conversation about that earlier on today. And it would make sense that that might be a good opportunity to clear. Now, one of the things we can now do is, of course, is look at the likes of the silver on the zeros and look at what one standard deviation is. Well, one standard deviation just now is 28 points. So if I know that one standard deviation is 28 points, the volatility has been starting to creep up again because it was quite low earlier on. You can see the volatility was actually at 17, which is where we got this 17-point extension from here. But it's actually increased in the last while, and it's gone back up to 28 points and 57. 28 and 57, you'd imagine, is about right. And therefore, we can obviously start thinking about the fact that, well, that's interesting. Volatility is rising. It's got quite a strong bearish skew to it. So we know that we don't want to step into this on the VWAP pullback area. We just want to make sure we book some profits. So there's the current storyline right there. So if we're right about this, we can go to the high price and we can drop down by 28 points. So if we drop down by 28 points, you see that that takes us into the prior swing low. Interesting, isn't it? Takes us into this prior swing low here. So for that reason, it is a booking operation for me here. I'm going to be taking some of my monies into this storyline. I'm not closing it and I'm not getting net long because the increase in volatility suggests that, well, if I'm bearish, the increase in volatility may, with that bearish skew, start pointing downwards towards a lower print here. And that's kind of where we're starting to head at this point on the silver, isn't it?